Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And each and every week I leave my lines on the chart so you can see how accurate the technical analysis is and how now especially the charts will be acting more as a risk management tool than a forecasting tool. Now, being that fear has overtaken the market with this coronavirus scare, I think it's very unfortunate that people are reacting in such a way, because if you look at the data, the flu is much more deadly than this coronavirus, but it's the anticipation, I believe, that the coronavirus could be more deadly than the flu. And whatever the case, people are reacting in a fearful way, and ultimately the analysts out there, especially the fundamental analysts and the corporate executives, are putting out notices almost warning people that this could eventually take an economic toll on the price of their stock. I tend to stick to the technical analysis, and as you can see, this was my line that I drew last week, and it was a 2-week forecast. If you remember, just go back and listen to that recording. I said that we would most likely go up to fill this gap right there. As I magnify that, that was a gap fill point. And look at that, we did exactly that. We filled the gap. And if you've been following along with my gap fill rules, you'll know that 80% of the time gaps fill. The second part of that rule is once the gap fills, there's an 80% chance that the price will reverse. And that's exactly what has happened. And I even said that would most likely happen after the gap filled, it would pull back. Now I'm maintaining this line right here as my 2-week forecast. Now that that gap has filled, I'm going to erase it, but I'm going to leave this line in place, with the end of that line being my target for the next week. Now notice above the market up here, there is another open gap. I think eventually we will fill that, and then we could most likely turn back from it, as the gap fill point will turn into resistance. Now look down at the bottom of the chart and notice this was my CCI forecast. You see that diagonal red line? I said that the CCI would most likely move up and cross. And as I zoom in here for the stochastics, I said that that too would most likely move up and cross with a buy signal, and that's exactly what's happened. Now, I'm going to go out on a limb and forecast that next week the CCI is going to move up and even cross the zero line. This black line is a momentum line. I think we're going to start heading higher. Short-term resistance will be right here at the highs from back on the 4th. But I think traders are going to have an absolute field day. If you are a trader, or if you're one of my subscribers who subscribes to a trade alert service, this is going to be a very interesting rest of the month, because the volatility is still there and we have enough price action to be able to take profits out of the market. While, keep in mind, the investors are pretty stressed out right now because they don't know how this is going to play out, and they'll most likely move to cash on the sidelines. But the traders are in and out, especially the swing traders. They're looking at the charts, they're holding position. The option traders, again, are having a field day here, and we're having a good time as well as we look at the technical signals. Now, if we take a look at the VIX, I'm going to hop right to the VIX. I said, and I staked my reputation on this, that this gap down here, as I circle that, that is an open gap. And 100% of the time, the gaps fill on the VIX. And I believe that the VIX will continue lower. You can see that we pulled back quite a bit right here on Tuesday. And we almost came down to my target price on the VIX. But ultimately, I think this VIX gap here is going to fill as the VIX pulls back. And again, I think it will. That's going to be short-term bullish for the S&P. I'll get to that in a moment. But notice this line right here. You see this horizontal red line? That is a 20-year resistance point. And look at that. Today, as I record this on the 6th of March, we came right up to that resistance point and pulled right back from it. As I zoom in here again, you'll see this is a very long shadow. That is an inverted hammer in a very big way. That is a bearish signal on the technicals. And again, if the VIX is bearish, the S&P is going to be bullish. So I'm going to go right to the SPY, so S&P 500 ETF. You can see that we almost came up to hit my target right here, which was the end of that line. We gapped down today on the 6th, and I believe we're going to start moving back up. Now keep in mind, last week I pointed this out. This shadow should not be here. That was a misprint. This too is an open gap that will be filled right around 334, 335 almost. And so if the gap on the VIX to the downside fills, then that will most likely bring the S&P back up to fill this gap up here. And that's what I'm looking forward to over the short term, intermediate term more or less. I'm playing the market from the long side. On any of these big dips, I'm getting long, and I'm protecting myself with stops below the market. Our equity subscribers took a long position in one of our candidates, and we're watching that as well. But look at this. This is, again, almost a 3-week forecast. I said 2 weeks, but this is going out actually into April. Look at the forecast on the stochastics. I said we would move up. We did that. Look at the CCI. I said we would move up. We've done that as well. I'm going to erase this because I think what we're going to see on the stochastics and on the CCI, I think the CCI is going to cross up just like that over the momentum line, and I think the stochastics is going to start to turn up as well as the market starts bouncing off this newly established trend line that I have here. Remember, this gap will most likely fill pretty short term. I'm saying by the end of next week that gap will most likely fill. This gap up here will take a little bit longer, and keep an eye on the S&P. Now, if we go to Russell 2000, which is a more broad-based index, look at this. This is an extremely powerful buy signal. That is a long shadowed candle, one that I haven't seen in a very long time. Look at the length of that candle. I would have to go back quite a good number of days here, if not weeks. I'll even have to look at the long-term weekly chart. You have not seen any long shadows like that all year. That is very bullish. That means that the sellers tried to push the Russell 2000 down. They failed to keep it on the lows. And as the price starts to move up, and I believe it will, the end of this line right here at 1601.53, that's the target that I've set for the Russell 2000. I'm not saying that we're going to go up and start breaking into new highs, but I think we could realistically hit that by the middle of April, beginning of May, right in that general area. I think that the CCI will start turning higher. I think the stochastics will cross with the buy signal, and we have a wide divergence from that 20-period moving average. Look at the monthly chart on this. I'm not going to go to the weekly. Look at the monthly. This is still very much an upward sloping trend. Yes, this could be a double top formation, but until this trend line breaks, we're still in a technical upward trend, and you don't want to buck that trend just yet. Once we start, or should we start, breaking down below this long-term trend line right here, then that would be a flag that we throw out as a caution flag. The Russell 2000 would have to break out and close below 1400 for that to be a break in that trend, but right now that's still very much intact. I'm going to hop right to the Qs. That's the tech sector. Look at that. Still technically in a very significant upward trend. As I zoom in and look at the daily chart, you'll see that here we almost hit my target. Again, this is a 2-week target. There's a gap above the market. I think ultimately this gap will fill. Same thing. My forecast was spot on. I said that the stochastics would most likely move up and cross. It's done that. As I magnify that, you can see it. That red line is what I drew last week when there was no price action there. Same thing for the CCI. I said that we would move up and cross to the buy signal. We did that. So my forecast for the CCI on the Qs for next week is that we're going to move up and cross over the momentum line, the signal, the zero line there, and then we'll start heading higher. One other thing that I forecasted last week, remember on Friday we had pretty high volume right here. See where my cursor is. And I said that we would start to see a drop in volume. We saw that drop in volume. There's my forecast. You can see that small sliver of a red line. That's what I forecasted for Monday in volume. I don't do that often, but I said most likely the fear is going to start to subside. We'll see that in the drop in volume, and we are seeing a steady drop in the highs of that volume, which tells us that the sellers are starting to calm down a bit. It's not over yet. There's still risks that you have to manage in the market, but be sure that you don't scare yourself out of the market and miss out on really good opportunities, because there's a lot of them out there. You know, with every downturn in a stock, there's going to be another stock going up. Clorox is a great example. You can see some of the pharmaceutical companies are battling for position as they try to come up with some kind of a vaccine for the coronavirus. We're going to see a lot. I think even companies like Amazon are going to do very well as people stay away from shopping in the supermarkets, and they'll go to Amazon Prime to order their groceries. You know, they have them dropped off at the front porch and they don't have to run into anyone. You have to think ahead like that. Don't have a knee-jerk reaction to the fear, but try to read it. Try to understand people. There's a whole psychology behind this. My good friend Martin Pring wrote a great book, Investment Psychology Explained, and he talks about fear in that book. And if you can anticipate how people will react, then you'll be ahead of them in the opportunities. You know, I think fear is really something that needs to be under control here. I'm not understanding the reasons why the media has latched on to this story so much when there's so much more going on out there. It almost feels like they're trying to push the market down, but I think that's going to backfire. As people get more or less used to the idea that coronavirus is going to be around just like the flu, and it's not as bad as the flu, I think they're going to really relax a little bit, and this market could go right back on track as the economic numbers support higher prices along with lower interest rates, and I think everything's going to be fine. So stay tuned to the market, guys. I'll keep you posted each and every week. Follow along. Share this video with your friends and family so that it could help calm them down during times of uncertainty. And really, if everyone focuses on the charts, it'll help you remove that emotion from the decision-making process, especially when you have money on the line. So enjoy the rest of the weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.